It really is true that Cathie Wood is the kiss of death. And you know, you usually don't want to say that, but I think you have to throw out all the bromides and really speak truthfully here because the viewers deserve it.
Kim,
she's awful.
We had a great opportunity to buy into Teladoc, and it then was hurt by an acquisition it made, Livongo. This is a beautiful acquisition for Teladoc. The most important variable, again, I'm going to come back to AI over and over again, because we think that is going to represent $30 trillion in market cap during the next 10 years. And we think the combination of Teladoc and Livongo is going to be a powerhouse. One services more the acute setting in medicine. That would be Teladoc itself primarily. And Livongo is more involved on the chronic side. So chronic conditions, kidney conditions, mental health, and so forth. So we believe that with this data, these two companies, now that they're together, now that they put their AI teams together, are going to be able to help make the healthcare ecosystem better, cheaper, faster, more productive, more creative. What we say about all kinds of innovation, they're in a beautiful position to do this.
Again, preliminary estimates, a tenfold increase. This is like Amazon. Remember, Amazon in the day, it IPO'd at 18 in 1997, went to 118, and then in the crisis, round trip back to 18. Today it's at 2,500. We see Teladoc in the same league as an Amazon. This is a winner-take-most market, and we feel that yes, short term, there was an earnings shortfall. They had to cut estimates. Admit that. We're looking 5 years out. We're looking at one of the biggest stories in healthcare, a category killer during the next 5 to 10 years.
Cathie Wood, ARK insanity. There's no coming back for invested in ARK funds. Not whatsoever. I really feel sorry for investors who have got sucked into the ARK hype, for as they obviously failed to realise that she's just spouting a total load of BS, and so got sucked into the ARK hype sales vortex. It reminds me of people who are brainwashed into buying timeshare apartments that they soon come to regret for the rest of their lives, which is the case with ARK. That's the ARK K and the ARK X, ARK G, blah blah. They're never coming back to the highs, let alone 4x over the next 5 years, as she keeps repeating. She said that at $100, and she's saying it at $50. So what's that, times 2 then? Which is what I've repeatedly warned, as my video from December illustrated, in response to a then latest hype videos saying at the time that ARK was gonna 4x from $95 or $100 over the next 5 years. Today ARK is trading at what, $40? That's a 60% drop from what I forecast to expect would happen to where ARK would be some 5 months ago, and it's down about 75% from its high. One of ARK's biggest positions, Teladoc, collapsed by 40% on bad earnings, taking the stock down by 90% from its high. What does Cathie Wood do? She then goes and buys another 22 million shares of Telaturd, and then she shows her face on mainstream media to try and pump the stock higher by explaining why Teladoc is a great buy and why she just threw another $800 million of investor funds into this no earnings garbage. If she actually knew what she was doing, she would not be investing in the likes of Teladoc, but instead Qualcomm. The fact that one of her biggest holdings was already down by over 80% and then collapsed another 40%, and all she could do was regurgitate the same disruptive crap that she'd been doing for over a year, and then goes and throws another 800 million of investors' money at no earnings trash, illustrates that she's an insane gambler. She doesn't know how to invest. This isn't a bear market for those invested in ARK. This is the 1930s depression. Collapsed the Dow 40. So much for disruptive mantra And to think that S&P is only down, what, about 14% versus ARK's 80% collapse? And with likely at least another 50% drop to come, as I've been warned to expect since February 2021. ARK is garbage. Warning to all holders of such growth tech stocks and funds such as Cathie Wood's ARK, the price drops are probably not even halfway done. Look, what's going to happen when ARK's largest holding Tesla crack? Well, it's already starting to crack. People are investing their life savings in this ARK insane asylum. Don't they have any exposure limit? It's a case of keep throwing good money after bad until they run out of new inflows. Classic noob investing mistake. There is no exposure limit because the stocks keep falling in value. Instead, if she had been focused on actual cash invested, her fund would only be down probably less than half what it is. Cathie Wood does not have a clue of how to actually invest. ARK is down, 50% year to date and 80% of its high. When ARK was trading at over $100, I half jokingly said I would seek to buy ARK at about below $20. Well, it looks like it won't be long before I take a small punt on ARK at around $17 a share. Remember this, ARK is an ETF and not a stock. It takes a special type of insanity to produce such an outcome. Insane. So heed my warning, stay away from turd stocks. That's no earnings garbage, and tread carefully with any high multiple stock. You really need to have a good understanding of any company trading at over 20 times earnings, else prepare to lose everything above 15 times earnings as multiples contract. Whilst my latest full spectrum in-depth analysis that took me a good 3 months of hard work, stop and go, but 3 months, is on the UK housing market that maps a trend forecast out for 3 full years into the future. Can the UK continue trending higher, or will interest rate hikes halt the housing bull run? All and more is revealed in my extensive UK housing market analysis and concluding detailed 3-year trend forecast. That will soon be followed by my updated US housing market trend forecast after my existing 2-year forecast recently concluded, that once more aims to project a trend for US house prices at least 2 years into the future. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month to gain access to all of my recent analysis on accumulating AI tech stocks at defined buying levels as and when opportunities arise. There's none of this waiting for the indices to drop, because there's a stealth bear market in progress that cycles through individual stocks like a Tasmanian devil. You saw last week. Did you see what happened to AMD, TSMC? And Qualcomm. That's the Tasmanian devil. Indices, not much changed, but you got new lows in Qualcomm, TSMC and AMD. So to gain access to all of my recent analysis on accumulating AI stocks during the bear market of 2022 that I forecast to expect as of September 2021, and then confirmed in my analysis of 5th of December following the CI18 trigger. That's a crash trigger that has a very low frequency. It occurred in February 2020 and it occurred again in December 2021. Warned of significantly lower prices ahead, which has come to pass, which is presenting myself and patrons with huge opportunities to accumulate target AI tech stocks at deep deviations from the highs. You know the motto. The greater the deviation from the high in good stocks, then the greater the buying opportunity being presented. Whilst here is my schedule of both in-depth analysis and market briefs, though they're not really brief, because I have a tendency to do mega pieces. So my briefs are other people's essays. So again, consider becoming a patron by supporting my work for just $4 per month to capitalize on the stock's bear market and what I strongly expect will soon follow it. As we ride the inflation megatrend, courtesy of central bank and government money printing on an epic scale. I've been warning of high inflation is coming since March 2020. You don't believe me? Go check my video. Every video ends with a warning that big inflation is coming. You should prepare for it. Well, big inflation has arrived, and it will last the whole of this decade, no matter what they say. Big inflation will be with us for the remainder of this decade. Yes, there'll be dips down to maybe 4%, but you're not going to see 2%. Not unless they change the CPI measure, edit everything out that goes up and just leaving the little bits that fall because of deflationary forces. The fiddle, you do realize CPI is fake. The real inflation rate is double CPI. What, 8%? Real is 16%. Go back and measure. Use the measure that they were using in the 1970s and early 80s. Use the same methodology, and US inflation is 16% now. UK inflation is at least 15%. That is CPI. So subscribe to this YouTube channel for new videos, and do consider becoming a patron by supporting my work. Just $4 per month as we ride the quantum AI megatrend into the future.